The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Amazon with the ticker symbol AMZN. I will first go over what I see on the daily chart and finish the video off with the weekly and monthly chart. Let me know if you guys like these weekly Amazon analysis, because it looks like I'm getting a lot of views from them. So if you guys maybe like to see more of Amazon, let me know in the comments down below. So let's take a look at the daily chart. It looks like it's breaking up as expected because of the support from the EMA. You can see the prices came back to the EMA, bounced up, came back over here, bounced up in late March, came back to the EMA again, could not stay below it in early to mid-April, bounced up again. So it was signifying that there is more aggressive buyers in the market than sellers, and they probably want to break out prices out of this potential range. I think the range highs are obviously right here at the 103, 104 level, and range lows, it's a little inconsistent, but we can leave it here. It's not that significant because prices are at the highs right now. So we have this horizontal line also in place. So this is a very key level because it was very strong support in the past. Prices broke through it and is acting as a very strong resistance. So this was resistance here. Prices sold off. The bulls try to break out of this level, this 103.60 or 104 level 1. So this is the first attempt for the bulls to break out, and it failed. So this is the second attempt for the bulls to break out. So we'll see if this can succeed or fail. So bulls tried one attempt to break out. It failed because prices shot right back inside the range. This is the second attempt for the bulls to break outside of this 103, 104 level and succeed. So we'll see if that can occur. The target for the bulls is at the 120. The short-term target is to fill in this gap right around this 110 level. So this was one leg up. This is the second leg up. There's a gap right here that was not filled. This candle right here tried to fill in the gap, almost did, but it failed. So maybe we will just reach this shorter term measurable target instead of the longer term. We'll have to wait and see. But as right now, prices are breaking outside of this range, or at least this level. It failed once in the past. It could fail once again in the future. That would be the expectation, is that it would fail because the macro picture is still down. So if we come back inside this range, get back below the EMA, then that's a very bearish sign, and we're probably going to be tumbling down to the lows, all-time lows of this downtrend. So we'll see if that occurs. That is the future play, is that this breakout will fail. But as right now, there's no short setup right now. It looks like it can still break out higher and higher to these targets, but from there I'm expecting it to fail and slowly sell off back inside of this range. There is this potential uptrend channel in play. We only have two touches on the bottom. We do have three right here if you include the first two right here, but this is technically just one. So 1, 2, and we only have one on the top. So right now, it's not really a channel in potentially. It could potentially come in play. So I'll leave it on the chart. But as right now, that's what the chart looks like. Impulse higher, a correction down. Bulls are in the formation of the second impulse higher. The measurement target is at the 120. You can see the angle of prices are inclining because the EMA is pointing up. So we have this breakout in play currently. But again, the macro picture is still down. So this breakout could potentially fail, and then the move would be, towards the downside. So that's how I'm looking at Amazon right now. Let's take a look at the weekly. And weekly chart shows that we are breaking outside of this confirmed downward channel. Let's go and make it yellow. So you can see that we had the pivot right here, the first point, second swing, third. You can say this is a test right here, so that'd be 4. If not, we just still had 3. This would be the fourth one right here. So 3 touches will confirm the channel. This is the fourth. We already have like 4 or 5 touches here, a few on the bottom. So this is definitely a confirmed channel. Any breakout of a channel would be a failure. It's just like breaking outside of a range. So this breakout right here, could lead to significant selling because after a breakout of this downtrend, the seller is going to get 2 attempts at it, 2 attacks to reach this low point at the 81 level. And that's what I would be expecting in the future. You can see there is this level as resistance in play too at this 104, 105 level. So We're breaking out, but again, this breakout is not something you probably want to play. That's how I look at the chart. I look at the failure. So I'm expecting this to fail, come back inside of that range I set on the daily chart, or back below this 104, 103 level, and then that's probably when the selling can occur. So I'm looking for this type of wave pattern after this breakout is complete. And the breakout is targeting the 120 level. We'll see if that succeeds. If not, if it fails to reach that and we start selling off right now, that's even a better sign for the bears, because the bulls failed to reach that target, and the selling will be kicked off earlier. So that's pretty much everything I had on the weekly. Want to show maybe a couple more things. You can see that we had this measured move right here, one leg down, second leg down. The prices came up short just a tad. It stopped at the 81, targeting the 77, 76. So this is still in play. We can still reach it after these two legs back. So we'll see if that can be reached. Now, let's say the breakout is successful and we don't go lower. Then what you want to see is this right here. You can see how in 2020 prices broke outside of the same level. This 103, 104 level, whatever. It was acting as strong resistance for numerous years. Prices in 2020 had a strong push above it. Okay, but why prices did not go back down? Because it failed to go down twice. You can see this red candle was a attempt to come back down. It failed because prices went up right after. There was another red candle, so prices pulled back again, failed. So market moves in twos. If it does something twice and it fails, it's most likely going to do the opposite, which is go up. So breakout, two attempts to go down, failed, rocketed higher. And how would you know it was going to fail? Well, you look at the macro structure. It was pointing up, and the measurement target was probably higher too. So there's reasons for prices to succeed in that breakout, but in this case there's reasons for this breakout to fail. So I'm expecting these two attempts to successfully come back inside of this level and continue lower. And last chart I want to look at is the monthly, and you can see that we're still below. In this bull trend, prices were above the EMA. Now in this bear market, prices are finding resistance at the EMA. So we found resistance there. So that could signify a same type of reaction once we reach it. And you can see that this EMA coincides right at that 120 level. So everything is, coming into play for prices to get rejected again. So we'll see if that occurs. We got rejected in the past right here. We can get rejected again in the future. So that's all I have for Amazon this week. This is Vee Trades, and thank you for your time.